It is my pleasure to welcome you to the NHT's first annual returns webinar. Our presenter, Mr. Damian McNally, here with me today is the Assistant General Manager of the Compliance Department here at the NHT, and he'll be guiding you through the processes for understanding annual returns, why it is important, how do you file it, and what role you play in allowing Jamaicans to access their NHT contributions. But before we get into his presentation, I'd like to introduce you to members of our compliance team. I'd invite you to make a note of their names and their locations, that you may be able to reach out to them in case you need assistance. So on your screens, you'll be seeing Ms. Rena Page Morgan, who's a compliance supervisor for Kingston, Nikisha Bailey Brown, compliance manager for Kingston, and Jennifer Staple Gowdy. You have Ms. Pauline Clark, Somi Salmon McKenzie, and Mr. Michael Mullings. Stacey Thomas Green, Sherry Ann Holmes Wilson, and Ms. Natalie Johnson. And we also have Delia Cook-Williams, Rowan Campbell, Sandra Poiser, and Melissa Williams Seymour, Andrew Ferguson, and Mr. Garth Evans. So now that we've introduced the team to you, we're going to get into the meat of the matter. Why you're joining us here this morning, talking about annual returns, Damian. So I know that you're going to guide us in what are annual returns, why are they important, and all the processes that are involved.
All right, good morning, Daniel. And let me say thanks for having me here. Let me first extend welcome on behalf of the compliance team and some of my colleagues, as you just heard their name, should be here with us online as well. I also bring greetings on behalf of our General Manager for Contribution Management, Mr. Gladstone Johnson, and by extension, our Senior General Manager from the Finance Division, Mr. Dwight Banks. Now, I would assume that for the most part, persons will be familiar with what I'm about to present. But, I consider it, that we have some important points for reinforcement and communication. And my presentation will be a springboard to responding to some of your questions. So Daniel, back to your question that you asked initially, what is the annual returns? The annual return is a legal document where it is that all employers are required to file, right, and to record and declare all information in relation to contributions for their employees. The annual return is the means by which the employer accounts for statutory contribution paid by both the employer and the employees. It is a document that identifies each contributing employee by name, NIS, and TRN. It states the amount of contribution paid by each employee for a particular year. So the question can be asked, who is required to file? All employers are required to deduct and pay over statutory contributions and taxes on behalf of all their employees. Who is an employee? Every person who is in your employment, who is engaged under what we call a contract of service, right? Whether it is that they are part-time, temporary, or full-time. As a matter of fact, the only exception is made for students, right? In addition to that, we have exemptions for employer contributions. And there's a few persons who fall, few organizations that fall in this category. Our foreign embassies, missions, consulates, and United Nations organizations situated here in Jamaica. Persons from Jamaica who are employed to these organizations only contribute, but there is no requirement for these organizations to pay the 3% employer contributions. And we also have our domestic workers, household helpers, and gardeners. These persons, while it is that they may be engaged with a private household, the only requirement is that these persons contribute 2% with no contributions expected from the employer. These employees or domestic workers, helpers, and gardeners are required to file what is called the SO4, which is the individual annual return, which is filed at the end of the year. And there is provision on Schedule A of the SO4 for the gardeners and domestic workers and persons in that categories to declare their contributions and only contribute 2% contribution.
So what you're saying is that gardeners, and I don't think a lot of people know that if you're a gardener, employed domestically, or if you're a chauffeur, you can contribute to the NHT. And based on my understanding, Damian, the calculation, the how much you're contributing isn't as significant that they would, that they believe just 2%.
Just 2%, and they are required to pay it quarterly, right? I said, I'm going to touch some more on that.
Right.
But it's important to know because we hear a lot of talk out there. Well, certainly I've heard it that NHE is not for me, and we're saying that for every single contributor. As a matter of fact, most of our policy initiatives are geared towards assisting our low-income contributors with home ownership. And so I don't want anybody to feel left out, and I'm using this opportunity to state that if you're a gardeners, you're domestic workers, once it is that your emoluments are above the minimum wage, and there should be nobody who is employed for a 40-hour work week who has been paid below the minimum wage. And so if that is the case, employer, sort out the thing, right? It should not be
employer, sort out the thing.
Right. All right, so we can move on now to talking about filing of the annual returns. Now, the mandatory e-filing of employers' annual return was implemented in January 1, 2015. Prior to that, persons could have filed their returns paper-based at tax office or the National Housing Trust. Now, since 2015, we have implemented what is called the Amalgamated Annual Return. This annual return captures all the statutories and contributions for all tax regulatory bodies, which is NIS, TAJ, Tax Administration Jamaica, HART, and NHT. And so it is filed on one document, which is called the SO2. Since 2015, you are required to file these annual returns online. The return is due January 1 and becomes overdue March 31st.
And that's something that a lot of people don't know. People think it becomes due March 31st,
No.
But it becomes overdue.
Right. I want to change that narrative because I hear persons saying that it's not due yet. No, that's not the case. It becomes due at the start of the year.
So you're telling me they have not, if we have persons watching and they have not filed, they're required to file before March 31st.
Right, becomes overdue. So in essence, our enforcement measures, if we have to apply them, won't start until after March. Having said that, it's not that we are saying that, listen, we actually should wait until March 31st. Once it is that you start the new calendar year, your annual returns becomes due, right? And the annual return is filed online using www.jamaicatax.gov.jm. That is tax administration website. You go and register for what is called e-filing, e-registration. Having completed the registration process, created your individual account, you are required now to file your returns online using Revenue Administration Information System, RAIS system, to file the annual returns. Now, the next point that I'd like to discuss with you is that now that the annual return is required to be filed using RAIS, which is TAJ's platform, Tax Administration Jamaica has a statute bar, a limitation, meaning that after 6 years, you can no longer file an original return, or you cannot make any amendment to a return that was filed. Now, given that the annual return is required to be filed January of the following year, we should not have much reason why it is that it takes 6 years for persons to file their annual return.
6 years? So you have cases where people take 6 years to file their annual returns?
There are some circumstances out there. You have situations where it is that employers, for some reason or the other, falls below the radar. It is that they wind up business and somehow they didn't file their return. And after it takes a while of identifying them, some you have to take to court. You find yourself in a situation. We find ourselves in a situation that it is years after the return becomes due, the annual return is filed. But we are saying that if 6 years passes, that return cannot be filed online. And let me add, employers and accountants, notwithstanding that the annual return may not be filed online. Once it is that you have an account with tax administration and there is an expectation that you should file an annual return, when it becomes past due, then your account automatically starts to calculate penalties for outstanding annual returns. Now, as I indicated, if after 6 years pass and you do not file a return online, it cannot be submitted using that platform. However, because at the National Housing Trust, we are required to account for all employees' contribution, notwithstanding that 6 years might have passed. Because it cannot be filed online, we accept these returns paper-based. And we try to avoid that process because that process is a very labor-intensive process. That process requires that you submit that annual return paper-based, and we have to identify resources in-house to actually type up all that data. Having typed up that data, upload it in our systems, ensure that the details are correct, ensure that the contributions are correct, ensure that the totals are correct, and ensure that there's sufficient payment to complete the reconciliation process. And I took some time to explain that for employers and accountants to get some insight that is not a same-day turnaround, right? Time to complete this process. And because we know we have situations, even this year, where it is that we are refunding 2013, for some reasons or the other, the annual return is just being filed, and having submitted a paper-based to the National Housing Trust is the expectation in the National Housing Trust will sort it out so that employees can access their refunds right away. I know that there's a lot of large expectations at the National Housing Trust, and we pride ourselves on it. But we cannot say to you that if you submit a returns paper-based today, that it will be sorted out for persons to access their refunds tomorrow.
Right.
And I explained just a while ago how labor-intensive that process is, right? But we know it happens because what we have found out, Daniel, is that there are instances where it is that person would have filed an annual return using RAISE platform. However, when we check those returns were not filed correctly, so there's no details. So you may see a registration, but you don't see the details of the employees, right? And so what we have been doing, we have been engaging the employer to say that, listen, refile these returns because we're not seeing it. Some employers are, will say that, listen, we're not filing because we have a document to show that we have filed that already. But we have to be imploring, insisting, using moral suasion to have them refiled because we are saying that, listen, notwithstanding you show a document indicating that you have filed, something went wrong. It may not altogether be your fault, but at the end of the day, we do not have the details for the employee.
It's not just filing, it is ensuring that it was actually completed, that the process was completed.
Precisely, right? And so, because when it is that you file, there's a declaration page, and then there's also the details of each employee contribution. And that is what is important to us, right? To have that details for each employee. If we don't have that details, we can't account for the contributions for each employee because just like the bank, we create individual accounts for each employee. So what we do, we create individual accounts, and for each area's contributions, we deposit that money in that account. When it becomes due for refund, it goes through a process of maturity, and it's available for persons to apply online for those contributions. And so we do not have a statute bar period like our colleagues at TAJ. And so we are saying that if employers or accountants, you find yourself in those situation, we are asking for your kind cooperation, right? Because we know that some of our compliance inspectors has not been having a nice time with some of the employers who have indicated that they have filed already, right? And we're saying that, listen, we apologize because, truth be told, some of the reasons may not be the fault of the employer, but at the end of the day, we have to account for each employee contributions. And so we ask for you to file that returns and do not wait until 6 years have passed, because if you wait till 6 years pass, then what will happen is that we have to go through that labor-intensive process of uploading the information.
Extensive process. So it saves them time, energy, and it allows their employee to access their benefits within a timely manner.
That's correct. Now, on the matter of annual return filings, there are three categories of annual returns, and I'll take a little time to explain. So when you file your annual return the first time around, it is regarded as the original annual returns. Now we know that, that you have situations where it is that there's error. Now, so apart from the original annual returns, you have what is called an amended return, and you have what is called a supplemental return. And I'm going to explain the distinction between the amended and the supplemental return. When there is correction required to the original return, an employer is required to file an amended return. An amended return replaces an original return.
So you file your returns, but you need to update the form.
Right. So there's some transposition error.
Right.
So the calculations are not correct. There are transposition error, persons' contributions are misaligned to contributor to employees. And you have varying reasons why it is that you need to correct it. Right? You file an amended return. An amended return replaces completely, right, the original return. However, you have instances where it is that the original return, in of itself, the calculations are correct. But say, for example, someone was missing from the returns. And we have instances where employees are not accounted for on the original return. And one of the main reasons is that the employer at the time of filing the return may not have had the NIS and the TRN for a particular employee. And so because they want to avoid late filing, avoid late penalty, they go ahead and file the original annual returns, leaving some employees of the return. Subsequent to that, they would have got the initial information for the employee. In that instance, you file a supplementary return. A supplementary return goes in addition to the original return.
So the amended return replaces the original, and the supplemental is just an addition,
right,
as the name suggests.
Right. And so, for example, another reason why it is that you file a supplementary return. Let's just say that you file the returns for an employee or employees, and the amounts on that original return is understated, right? And you have now discovered that. In this case, you can file a supplementary return to account for the additional amount.
So employers don't have their employees TRN and NIS. That happens?
Yes, and let me tell you, we have seen a lot of situations. And within certain place of employment, you know, and I don't want to call out any one particular industry.
No.
Right? But you know, you have a number of employers where it is that you have high turnover rate with employees.
Right.
And so what will happen is that you find employers engaging persons employing them. And at the point of engagement, the employer may not have their TRN or their NIS, but because they need them for a particular service, they take them on, and then with the expectation that subsequent to initial engagement, they will submit the TRN or the NIS.
And they just get lost in the system.
Precisely. And then in some instances, there are disengagement of those employees without submitting this information. From the end of the year, the employer finds themselves in a situation where it is that they don't have this information, they're not able to make contact with them, and so what they do, they leave them off the original return, right? And I tell you because, and let me say to you, our accountants and our employers, more and more our employees, our contributors are becoming more aware and engaged about the usefulness and the benefits attached to their contributions. And so if you find yourself with an employee only for 1 week, 2 weeks, or any short stint, and once it is that you made those deductions, you are required to pay them over to the NHT and to record those contributions on the annual returns. Because I am telling you, these employees are inquiring about their contributions, right? It's no longer days gone by where some people are in the know and some persons are not aware. Every single employee nowadays are aware of the benefits associated with their contributions. So employers, I implore of you to do right by your employees.
And even if they're migrating, they're
Even
going
if
to
they're
call in,
migrating.
they want to know how many, you know, they want to check up on their contributions
Yes.
and they want to see that it's still there.
Yes, and guess what happened now? It doesn't matter the value of those contributions.
It's important.
It's important. You know, we have persons that left Jamaica long ago.
In the 80s,
In the 80s.
early
inquired,
90s.
And they're saying that, listen, for some of us, it's not even the amount, it's the principle.
Exactly.
Right? It was taken from my salary. I want it. Right? And we are the
And they want the
National Housing Trust
benefits.
say that, listen, notwithstanding the nominal figure, once it is that those deductions were made, they are due to you. And we are duty bound by as an organization to account for the contributions of all employees. And we want our employers to assist us with that process by ensuring that you account for the contributions of every employee. As I said earlier, the only category of employees that you're not required to make deductions for are those students who may come for a summer job.
Right.
Right? Beyond that, once it is, whether they are seasonal, whether they are temporary, whether they are casual, or any classification you want to apply to them. Once it is that, yes, that it is that they work a 40-hour work week, the amount it is that they earn is above the minimum wage or in line with the minimum wage, you're expected to make these deductions and you're required to pay these deductions over to the National Housing Trust and to file your annual returns at the end of the year.
Gotcha.
All right. So what are the benefits of filing? We spoke about contributions to the fund, right? But all amounts that it is that are deducted from an employee's salary and paid over to the National Housing Trust, it is due to those employees after 7 years, paid in the 8th year, right, with interest, right? And so for this year, we are refunding 2013 contributions, right? And so for anyone who it is that had contributed in 2013 or years before, if you have not applied, you can apply online. But as we love to say, Daniel, and the National Housing Trust, if it is that those contributions were not paid over by the employer, we can't refund, right? We don't want to find ourselves in a situation that we pay not, we don't receive.
Exactly.
And for you accountants, you know, that's a very dangerous situation, right?
It's like not putting money in your account and going to the ATM and expecting to withdraw what was not there.
Right. It doesn't work that way, right? And now, also, to continue in terms of the benefits, it is that once it is that you're a contributor, you know, the employees can access their benefits, housing benefits. You can get a loan from the National Housing Trust. And I'm sure that there'll be other webinars to elaborate on, you know, the benefits associated with the contributions. Right? Or employers, once it is that you file your returns on time, you can obtain a tax compliance certificate. And let me use this opportunity to say that tax administration are now categorizing our employers. Once it is that you have a history of filing your returns on time, paying your taxes and your contributions on time, you'll be issued an automatic TCC. Right, and so what we have, you have platinum, you have gold members based on the level of your compliance. We would want for all our employers to
so it's an automatic. Is that VIP treatment? Just automatic once you pay.
Right.
Once you file on time.
Online, right. It's an automatic TCC that will be assigned to your account. And so what it does is that once it is that you're a compliant employer, you have no need to come to the NHT each month or to tax office to go through that painstaking process of getting a clearance letter from each statutory body to get a TCC. Keep your accounts up to date, right? And you will get your automatic TCC.
Because the TCC is important.
Very important. Nowadays, you know, it's like you can't do business without a TCC. If you want a loan from the bank, if you want to engage DBJ, Development Bank of Jamaica, anything for accessing funding, right? TCC. You want a contract from the government, you need to have a TCC. So it's important that it is that our employers file their returns on time and make payments of taxes and contributions on time. The other thing that I want to remind our accountants and employers about is that the employer contribution, the 3%, is a tax deductible expense. So what that means, Daniel, is that if you have, say, 10 employees and their contributions from their salary amounts to 100,000, and the 3% from the employer amounts to 150,000. That 150,000 is regarded as a tax deductible expense that helps to reduce the tax liability of the company. So it's a benefit to the company.
So it benefits them because is that like a tax break? Is that what it is?
Helping getting reduces your income tax obligation.
But there are so many benefits to filing.
Exactly.
Why would a company not want to access these benefits?
You and I don't know why, but we're just here to encourage and to remind our employers and therefore accountants of the importance.
TCC tax break, employees getting their housing benefits,
Yes.
contribution refunds, multiple benefits.
Now, let me touch on the matter of what are some of the frequent filing errors. And we spoke about some of them prior to now. And what a number of things is that the NIS may be incorrect for the employee, the TRN, incorrect spelling of names, right? And let me tell you now, our accountants and our employers, we operate a very sophisticated electronic process, right? And so you're talking about systems that read and interpret data. And so if it is that you make an error with an employee name or NIS, whether it's an error of omission or a transposition error, it will impact the employee being able to get their contributions refunded. And so we encourage our employers and our accountants to ensure that you put your own mechanism in place to ensure that it is that the annual return is filed correctly and complete in terms of the calculations, in terms of the spelling of the names, in terms of the NIS for each employee and TRM. And let me say this, I know a lot of times employers feel like it is bureaucratic when we ask them to give their employee what is called a verification letter to state that this is the correct spelling of their name or this is their correct NIS. Then we have seen that you cannot go by name alone. You have like a Daniel Edwards, as unique as you think your name is.
Because I just think I'm the only one, but that may not be the case.
No, and as a matter of fact, we have seen instances in large, especially in large places of employment, where it is that you have employers with the same exact name and even the same date of birth.
So the same first and last name and the same date of birth.
Same date of birth. So the only thing that is regarded as the unique identifier is the TRN and the NIS.
And that is how we identify you when you come to us. So it's important for that information to be there.
That's correct. All right. Other filing errors, emoluments not accurately stated.
Emoluments, Damian.
Big word.
Emoluments. What does that include?
All right. Emoluments are all payments, whether in cash or benefits, that is paid to an employee due to their engagement with their employer. So whether it's your basic salary, whether it's your rent allowance, whether it's your motor vehicle allowance, or
lunch allowance, clothing,
all of
everything.
Right. All of them put together are regarded as your emoluments. And for employees, you contribute on your gross emoluments. Right. So it's important that emoluments be stated correctly on the annual returns. We have instances where it is that the calculations are not done correctly in terms of the 2% contributions for the employee or the corresponding 3% contributions. There's confusion when it comes to the matter of contract for service and contract of service. Not going to spend a lot of time on that, but for persons who are employed, meaning that there's an employer-employee relationship, you are regarded as being hired under a contract of service, and there is an expectation that the employer deduct the contributions and pay them over to NHT along with the corresponding employer 3% contributions, right? And then we have the matter of personal service. Explain something a little bit, so that's a bit technical. So let's just say that, Daniel, that you are employed to the National Housing Trust, but you have some technical competencies that it is that another organization may engage you about. So, you are in communication, you're a communication expert extraordinaire, and so an institutions may want you to come in and do something for, speech writing or delivery of presentations, and they engage you for a few hours. What they will do, they will engage you under a personal contract. They should deduct the income tax, but you are required to file your individual returns to pay the additional NHT.
Oh, so
Yes.
while employed here at the NHT, my employer is going to be filing on my behalf and paying over my deductions on my behalf. But if I am also, and I don't think a lot of people know that, if I am also engaged based on my technical skills at another entity.
And that's the important part, the technical skills.
Right.
Because some persons may say that you're just a regular contractor. We are saying that personal services is aligned to some competencies that you have that another organization would want to benefit from.
Right.
And they want it on a part-time basis.
Right. So then I know I'll have to register, which I know you get a little bit into self-employed, but then I'll register self-employed and file those returns.
Right. You declare that income,
right,
and then pay the contributions. And in that case, you'll pay 3% contributions. Right. All right, so let's continue. And you spoke about the self-employed, so let me jump right into that. As of 2014, self-employed individuals are required to file annual returns of income tax and contribution payable on a format is called SO4. Just like the SO2, the SO4 is an amalgamated return that self-employed individuals use to file their taxes and their contributions. It is due in January and becomes overdue after March 15th.
So not March 31st, like normal, not March 31st,
right,
but March 15th.
For the self-employed. And I know sometimes THE give a grace period and allow to the end of the year, but it becomes overdue by March 15th. You and I don't know when that grace period will be extended, so we don't want to find ourselves in court and the penalty in filing late. And so we want to change the communication. It is due January and becomes overdue by March 15th. Right. And so it's important that all our self-employed individuals file their SO4, declare their net income, and pay the requisite contributions and taxes for declaration of current year income. Right. The self-employed individual is required to file what is called an SO4A. Unlike the employees, the self-employed persons can only estimate what they intend to earn for this year. For example, you would have filed your annual returns for the income that you earned for 2020. You would either file it in January, or if you don't file it in January, you have to file it by March 15th. Right. And so, but along with that SO4, you need to file your SO4A in January. The SO4A is the estimate of what you intend to earn for this year.
Right.
And as self-employed, a lot of persons do not know exactly what will be their earnings from their self-employed activity. So what we ask for you to is to file an estimate. In most instances, your prior year income is regarded as your estimate for the current year.
Oh, right. So it's a prior year that you estimate how much you're going to make in the current year.
Precisely. And there is provision on the SO4A for you to state that your prior year income was X, and based on that, this is going to use as your current year estimate. And if your estimate is not aligned to your prior year income, the SO4 asks you what is the reason why it is that it is not aligned with prior year. So you may have a situation where it is that, based on what you're doing, you may be earning more, you expect to earn more, or based on the economic circumstances, no, you don't see where it is that you'll be earning that same amount, and hence you're making a lower projection, right? And so when you file the SO4A from the end of the year, you file your SO4, which has your actual income.
Oh, got you. But Damien, I have a question. What if I have a small business? Am I still required to file? I mean, it's just me and two other persons and we're paying houses. We're paying, that is what I do. And so, are you still required to file?
Yes.
Just two of us employed, me, I'm the boss.
All right, so let me explain. That's a very good question, Daniel. Now, what you have about two categories of companies. If it is that, Daniel, you have a limited liability company, right? All your employees are required to be filed on the returns. And if it is, and again, it's a limited liability company, then you would put your name on it as an employee as well, because a limited liability company means that this company, quote unquote, in tax and accounting world language, we say has a life of its own. And even though you are a director, if you work within the company, you're also regarded as an employee. And so if you have employees, both yourself and your employees' contributions and taxes must be captured on the SO2 and on the monthly SO1.
Okay.
The distinction between that and other entities is where it is that you are registered self-employed and you have a trading entity. So you may have Daniel Edwards trading as Daniel's Photoshop, right? You have registered as a self-employed, but you have a trade name. In that instance, the employees of Daniel's Photoshop information should be captured on the SO2 and on the monthly SO1. However, for your taxes and contributions, you are required to file the SO4.
Okay.
All right. All right. Self-employed persons are required to file their SO4 and their SO4A. As I said earlier, the SO4 represents amount earned during the period for each year, and the SO4A represents estimated earnings for current year. All right. And the self-employed contributions payments, unlike the employees, are due quarterly. So the self-employed payments are due by the 15th of the third month in each quarter. So the first quarter is January to March. The payments are due by the 15th of March. For the second quarter, which is April to June, that second quarter payment is due the 15th of June, and the third quarter, the 15th of September, and the last quarter of the year, the payments are due the 15th of December. Contribution payment is made based on statutory income declared on the SO4A. And let me explain a little bit. For employees, the contribution is made on gross emoluments. For self-employed, it is based on statutory income. Your statutory income is your net income, less amounts contribute to NIS, or if it is that you are paying pension to a formalized pension scheme. After those deductions from your net income, it is regarded as your statutory income, and you pay NHE 3% contributions on your statutory income.
So you're only paying on your net income. So it's only if you've made
an income.
Precisely. Only if you made a profit.
That's a good
you still
point.
have to file.
You still have to file.
Still have to file. But only if you've made a profit and income will you be expected to pay your contribution returns, pay your contributions.
That's correct. And so let me elaborate a bit. So as a self-employed individual, right, you project that it is that you intake. I go into business to make money. But come the end of the year, when you tabulate all your inflows, all your revenue, and all your sales, and then you match it up against your business expenses, and I deliberately said business expenses because it is only expenses that is attributed to earning the income is regarded as a business expense. If when it is that you compare your revenue with your expenses and your expenses are more than your income, it simply means that you have a loss, right? If you have a loss, you're expected to file as Daniel said, but there will be no obligation attached to your loss. If you made an income, then you are regarded to contribute on your net income.
And that's important.
All right.
To note.
All right. Now, on a not so nice point, the matter of penalties for not filing. And so, we encourage our employers and our self-employed individuals to file their returns. And we said that the return is due January and becomes overdue after March 31st for employers and after March 15 for self-employed individuals. For our employers, I want to stress this point that if it is that you do not file your returns on time, come March 31st, our compliance team will be engaging you in the first instance, sometimes with verbal reminders, and in other instances, we will send you a 14 days notice. We ask for you not to ignore these notices. Right? Notice expire and you still don't file, we'll have our legal department issue a demand notice. If the annual return is not filed after the demand notice expired, then the next step is to take the matter to court. And so you'll be issued a summons, and then you will be required to come to court. And let me say that once the summons is issued, you are required to go to court.
So we don't just take people to court.
No,
We
it's a process.
notify them.
Right.
Go through the
Sometimes you are
procedures.
called by our compliance inspector and managers, right? And you are also issued a 14 days notice. When that expires, you get another 14 days notice, which is a demand notice, right?
Right.
And thereafter, if it is that you don't file, then you'll be issued a summons to go to the parish court. If the matter appears before the parish court, as per our act, you can be fined up to $30,000 for each annual return that is outstanding. And so if you have 3 annual returns outstanding, for example, 2018, 19, and 20, you can be fined up to $30,000 for each.
For each. So if somebody has multiple years outstanding, that can come out to quite a handsome sum of money.
And let me tell you, it is not within the purview of the National Housing Trust how a parish court judge handles this matter.
It's in the hands
parish
of the
court,
judge.
right, determines what it is based on the circumstances they see in front of them as to what they are charged. We're not want to scare anybody, but I've seen instances where persons are charged and they do not have the money on them, and they have to sit on the court bench until someone comes to pay the money, or they may find themselves one of the government hotels overnight. You know what they're talking about. And we don't want that for employers. Right? So we are saying file on time. No. In addition to that, if an employee is deprived of an NHT loan benefit because an employer fails to file the returns and declare the contributions of that employee, if the employee is denied a benefit, because what happens is that if your name does not appear on the return and the employer comes to the NHT to say that they want a benefit, when they come with the documents, we say to them that, boy, guess we see no contributions for you. Even though they say a word that XYZ entity, wouldn't see with that entity file a return, we engage and we're not getting through to them, or they may be gone off the radar. That employee can sue that employer for 3 times the benefit. So
they can sue the employer. So if they would have, say, for example, that employee would have qualified for $6.5 million, they can sue the employer for 3 times that benefit. Yes. Can it be more? It depends on the discretion of the judge.
Right. And let me tell you, I have seen this, and again, not to scare our employers and accountants, a lot of large auditing firms take on these cases as a way of giving back. So I have seen some very notable accounting firms take on these cases for some employees that just they think that they are voiceless, right? Because some employer may have the view that, listen, we don't pay this over. This employee may make some noise, but after a while he goes quiet. But what I'm seeing happening is that you have some Queen's Counsel attorney to say that, listen, these employers are taking advantage. We'll take these cases pro bono and take them to court and sue the employer. Not scaring you, but telling you the reality.
No, but it is important. So employers and accountants, please. And it is a sad reality sometimes when someone comes to the NHT, they said, this year is my year to get a home, because based on their knowledge, they've been, contributing as PAYE. And so their contributions are being paid over by their employer. And it's such a sad realization for some of them when they come to us ready to access a benefit and we say, we can't find contributions for you.
You can attest to that in Jamaica, one of the biggest accomplishments of our people as citizens
is a key, earning your own key.
Right. And when someone
and not the car key alone, the house is big things,
Yes.
House is huge.
Yes. And so employers and accountants, again, we ask for you to do right by your employees, right? And so let me just say it again. If it is that you don't file the returns after March 31st, we'll send a little love letter, the 14 days notice. If you don't comply, you'll get a notice from our attorneys. And if you decide to ignore it, and let me say employers, because I've got the complaints time and time again that after receiving the summons, that employers are saying that no one told them about the return is outstanding. They didn't get a notice. But I am not here to say that's not the case, but what I do recognize is a lot of times that employer disregard or pays little attention to these notices. It's only when it is that they say that quote unquote pink or white summon from the court, they sit up and say
and they jump
no.
up.
Yes.
But who wants to go to court in this day and age, Damien?
And I'm saying that, listen, we do not want to disrespect his or her majesty court. And so I'm using this opportunity to say to the employers, once you get that summons, you have to go to court, because we cannot insert ourselves in that process to tell the judge that, listen, you know, the person eventually filed the returns. Once the summons was issued, your name will appear in the court log, and you will be required to go to court. Not to scare anyone, but if you do not turn up to court, the judge will issue what is called a warrant for disobedience, right, of the judge's request. And we do not want that.
And this is such important information. Yes. So heed his warning, file your returns on time.
Right. So we are winding down. So to recap the salient points, the SO2 annual return is a document required by law for employers to report statutory contributions for both employers and employees. This annual return, the SO2, is due January of each year and becomes overdue after March 31st, right? And amended returns can be filed to replace the original returns. A supplementary returns can be filed to support the original returns. And we encourage you, if you have amended or supplementary return, to file them right away, because they are filed online. Tax Administration Jamaica have a statute of limitations where after 6 years, no filing, no amended or supplementary return can be filed. We do not want to go the route. We avoid the route of filing paper-based returns. And so we encourage you to file on time. If it is that you recognize that there's an error with your return, file a supplementary or amended return, and do so at its earliest possible time. And avoid having incurred any penalty. Because if you 30,000 penalty, because you know, I've seen situations where it is that an employer doesn't file his return on time, and the total amount of contributions on that return is less than 30,000. So can you imagine you don't file on time, have to pay 30,000 for the court, and then you have to pay about 10 or 15,000 for that return?
In addition.
Yes. So again, avoid having to pay penalties, file on time.
Boy, what more to say after such expert advice? Ladies and gentlemen, you heard from the Assistant General Manager of the NHT's Compliance Department himself. File your annual returns on time, file them accurately. And if you have any questions, because you may not know everything, especially if you're a young organization, reach out to a member of the compliance department for assistance. Very accessible and very informed. And they'll be more than happy to assist you to get on the right track, because home ownership and home benefits and housing benefits are very important. So during the registration process, we asked you guys to submit your questions that you would love to be answered here today. And not to worry, if you don't get your questions addressed, you can always, as I say, reach out to a compliance officer. You can submit your questions in the chat, and a compliance officer will be sure to reach out to you within the next 24 hours. So the first question to you, Damien, that we have here: what if all employees were accounted for and the annual returns calculated correctly? However, the entity made some kind of overpayment. How do you reconcile that overpayment? Will the person be reimbursed by check or electronically, or does it go to another year?
It's a very good question, Daniel, and it's a question that we have been seeing a lot. No, once it is that we do our reconciliation and recognize that it's a genuine overpayment, and I use the word genuine because, as I indicated in my presentation earlier, sometimes an employee is left off the returns intentionally or unintentionally. Once we satisfy ourselves that the employer has accounted for everyone on the annual returns, both for that particular year and for subsequent periods, and we then reach that we'll satisfy ourselves that it's a genuine overpayment, in the first instance, we will apply it to a future period because we expect that our employers operate our business as a going concern.
Right, because they're going to continue.
Right.
They want to be around
Continue.
for a
Right.
long time.
Right. And so in that instances, we will engage the employer, we'll take a document to you to say that, listen, having reconciled your account, recognize that there is an overpayment of X, kindly sign here for us to make a transfer of that overpayment to a future period. If those situations come about where it is that there's no future payments to apply because the entity may be going out of business, or so I would need to make a refund, then we will do so.
Okay, so you can do both, refund and reapply it.
Right, but
Two.
once it's expected that you are continuing business
Right.
and continue to have obligations, we will put it to that future
You're just
period
going to put it to that
and
period.
advise us what period we'll be putting it to.
Oh, simple enough. All right. So tell me something. If you have an employee who applies for a loan, right? If they've already filed their SO2 and the SO1 recently, why is it? Do we still need a verification letter from the employer?
All right. So as I had explained earlier, we have an operate an electronic process. Once an annual return is filed and it's filed correctly and the payments are made, we account for that information. So everyone in our compliance department, our loans origination department, customer service are able to see those contributions. You're supposed to see the employee name, NIS, their gross emoluments, and their contributions. Right. Once it is that we are seeing that information in our system, there's no need for the employer to give the employee a letter. However, let me quickly say that there are instances where one, for some reason or the other, a number of the years are not showing. Maybe the annual return is filed late. Right. Maybe there was some error in filing the returns or the current period, because it is that, say, for example, we may be able to account for everything for up to 2020 for an employee because the employer has filed a return. Yes. But let's just say that because you're applying for a loan, we need to know your current income and contributions. The current year, say January or March, may not be in our systems. In those instances, we ask for a letter to verify the contributions. Okay. Or if it is that the prior year is not our system, we may ask the employer. Or once it is that we have the information in-house, we have no need to ask the employer or the employer to get that verification letter. So it's only if we don't have the information in-house that we're going to ask for them to get an employment verification letter. That's correct. So another question that has come to us, is the NHT system, up to date with the TAJ system? Is there some kind of syncing? How does it coincide? Yes. How do you guys do what you do? All right. So again, I love to say that we have a very sophisticated electronic system. However, Revenue Administration Information System, RAISE, is a platform that all statutory bodies use. NHT, Tax Administration, National Insurance, and HEART. However, notwithstanding that the annual return is filed in RAISE and the payments are made in RAISE, that information has to be passed on to NHT systems, right? Both for annual returns and for payments. And the standard is a 24-hour arrangement. So within 24 hours. Right. And so payments made in RAISE today is reflected tomorrow and the annual returns. But one will understand if it is that there's an error with the annual returns, whether in terms of the employer reference number or TRN, you may have some delays. Right. But to answer your question precisely, it's a 24-hour process. But that's pretty good, I believe, yes, that within 24 hours, that information will reflect. Right. And another question person may ask, if you have the information in RAISE, why do we need our systems? While it is that we use an amalgamated platform, one will understand that the process of NHT differs from tax administration. Right. We refund contributions. So we need to ensure that we account for every single individual information. Yes. While we have the information as per an employer, we need to have the information as per an employee. Right. Got you. Got that. All right. So another question that has come to us, you touched on the idea of demand notices, Damian. School getting a lot of demand notices. Right. How do they deal with the issue? All right, let me categorize. And so you have your private schools. And we know that with this pandemic, a lot of our private schools have found it difficult because you and I know that a lot of these private institutions, even though they have online platform, a lot of parents who have it difficult themselves may not be paying the fees. And it is these school fees that are used to operate the school administratively. And so we have had a lot of instances where it is that, that private schools, are not up to date in filing their returns or making payment, and so we issue them notices. Where it is that you are facing difficulty because of what I just explained, engage us. Write to us, we'll have a payment agreement in place to settle the amounts outstanding, right? If you present an extenuating situation for us to request to waive interest, that's a matter that can be escalated to our board for consideration. Then you have your government schools. I think the question is more aligned to our government schools.
Yes.
Right. And so what happens is that you have a lot of government schools that are given what you call subvention, meaning they prepare a budget and then ministry give them payments for salaries to take care of school, to pay your taxes. In those situations, we ask those schools to pay over their contributions. And we know schools that some of the time you get a subvention, but you have to use the money to do something else, like you need a new blackboard, you need a new bench, and so you take the subvention and use it otherwise, right? But we have to ensure that we collect the employees' contributions, right? Because I can tell you, every single category of employee engage the NHT for benefit and their refunds, and not to be outdone are public sector employees.
Right.
Right. And so we, notwithstanding these challenges, we have to ensure that we get the payments. Know what we ask for these schools. If it is that when we engage you for outstanding contributions and you did not get the money from the ministry, put it in writing to us and we will engage the ministry for these payments.
So they don't have to take it on themselves.
Right.
They write to you, hear that? You write to the compliance department informing them. Because what I like to tell people is that we're not here to stand over you.
No.
We're not here as
We're partners.
We're partners,
Yes.
right? So reach out to us, inform us, and if you are an employee and you're having difficulty with your employer, reach out to us.
Right. And it's important because what happened, we have find those instances, where it is that the ministry say that they gave the school the money, the school is saying they did not get the money. So here what happened now, we know how to find ourselves between that sort of back and forth. You put it in writing to indicate that you did not get the subventions to make your statutory payments, we will engage the ministry.
And I think we had, and I think you may have answered it, but probably just go over it, just it again. If you file your SO2 annually, what is the importance of filing the SO1 monthly?
All right, that's a very good question. If anyone has been paying attention to NHT's Act, the Act requires that you file monthly returns, right? But to make it easier for employers, we asked for annual returns. And so now it is that the SO1 requires the details of each employee. It is now falling in line with our NHT Act. However, both the monthly declaration and the annual declaration is important, because when we create an account for each employee, we don't create with the monthly deposit, we create it with the annual deposits. So let's say that, that for Damian McNally, you deducted, say, $20,000 for the month, and then you have, say, 12 months of that. It's from the end of the year, we create an account. So while it's important that you declare the monthly, we only use the annual information to create the individual account for the entire year contributions.
Oh.
Right. But the monthly is important. And let me tell you why. What used to happen prior to now, Daniel, is that we understand business. A lot of them are in survival mode and they have to manage cash flow. And so the declaration in terms of deductions for contributions may amount to, say, 100,000 monthly. But what we find some employers doing, only paying a partial amount, and then come the end of the year, right, they pay the total amount, or whatever the difference is, they pay it up.
Right.
But notice that you are required to file the details of each employee with the monthly SO1, Whenever our compliance inspector and manager see that there's a difference, we will engage them. So we don't wait until the end of the year to do the compliance work, we do it monthly as well. So if it is that you have a short payment for a particular month, we will be engaging you. And we will have the information from the details from the employer to say that, listen, you have 10 employees in your employment, but you only made payment for 5. Where's the money for the next 5?
And on that note, that is all the time that we have today. You heard it straight from the big man himself, the Assistant General Manager for Compliance Department, straight from the source. Now, I know that you guys may have known what to do before, but you may have had questions, and this session was afforded you to help you to understand. And this is why these sessions are important. And this is why continuous engagement is important, to update information. So I want to thank you for that, Damian, for expertly guiding us through the process. So now that you're equipped with this information, you will be able to have other Jamaicans access their NHG benefit. And as we stressed before, reach out to any compliance officer at any time to have your questions answered. And the information is also available on our website, www.nht.gov.jm. So pay over your contributions, file your annual returns on time and accurately. On behalf of the compliance team of the National Housing Trust, this is our webinar, our very first webinar. Thank you for joining us, and do have yourself a wonderful day.